Why should developing countries create an alternative to the World Bank to get advice? Although World Bank is known to be a lender to less developed countries and developing countries, but increasingly it is being found that their advice has far-reaching influence on the growth of developing countries than the money they lend to these countries. First thing, World Bank's own research finds that World Bank doesn't know how to prescribe sustainable growth path to developing countries. Second thing, World Bank's policy advices are mostly given by economists, and they mostly study the after effect of economic growth. Whether Professor Solo or whether Professor Romer, they fail to explain the role of science and engineering in economic growth. They recognize their role, but how usually it works in a competitive market economy, it is still unclear to them. The second point is that often the situation which stimulated the growth in one country in certain period of time doesn't work in other countries. Like India was very successful in developing IT service export, but by following that path, Bangladesh could not repeat it. And there are many such examples. Often World Bank prescribe to follow others. And that following model doesn't work in this globally competitive market economy. The next one is World Bank has been promoting a model which was created by the colonial powers. Colonial powers divided the roles between colonies and the masters. Colonies would provide raw material and labor, and masters would come up with ideas in the form of product design, in the form of machine, to process those labor and raw materials to produce economic output. Economic value addition out of ideas would be far more than labor and raw material. And that is the reason they also perfected patent system of the world. So that per capita income of European countries or European colonial powers would remain far higher than colonies. And World Bank still today has been pursuing that model, that developing countries would be like former colonies. They would keep supplying labor and raw material to the global value chain. And advanced countries, particularly from Europe, USA, Japan, they would bring in the market their ideas of processing them. And developing countries need to figure out how to get out of it for two reasons. Number one, the value addition out of natural resource and labor is basically has reached to saturation for many countries. And World Bank term is as a growth trap. And they do not know how to prescribe developing countries to exit that growth trap. Second thing is that in order to exit this growth trap, developing countries now need to leverage the science and engineering to produce ideas and integrate those ideas in the products and process so that they succeed in improving the quality of their economic outputs and reducing the cost. And World Bank's development model does not offer this role to developing countries. And the way Japan or European countries or America succeeded do not exactly work for developing countries. That means following doesn't work. And World Bank doesn't have the proven capacity of giving country-specific advice which works for them. And that is the reason every developing country now should focus on investing in their thinking ability, in their analytical ability, in their strategy formation ability, in their own growth formula development ability. Until and unless they focus on that, they are not going to succeed to create the sustained growth path, eventually keep growing as an advanced country, as a developed economy.